Assalamualaikum and good day everyone. Today I will explain about the case number 5, which is about the Caribbean Brewer that involve an issue regarding the transfer pricings, ethics and governance. So before I proceed with the questions, let me introduce myself first. My name is Norma Sarah binti Omar. My matrix number is 265674. So without further delay, let's proceed to the first questions. First, before I proceed to the first questions, let me explain a little bit about the cost allocation and the transfer pricing. So we will go first to the cost allocations. Cost allocations is a method of assigning costs related to the projects, which is the cost allocation is generally used for financial reporting purpose to spread costs among the departments or inventory items, while the transfer pricings can be defined as the value which is attached to the goods or service that was transferred between the related parties, or in other words, the transfer pricing is the price that is paid for goods or service transferred from one unit of an organization to the other units that situated in a different countries. So back to the questions on how the majority shareholder actually can shift the wealth through the accounting cost allocations and the transfer pricing is by the influencing the decision making. So in the group of several subsidiaries, there are majority shareholders in company that enjoy many rights when it comes to the decision makings, as the individual or corporations which is given the full control of the firms of the shareholders. So in this case, the majority shareholders of Gera International are holding this power since they are acquire 75% of the common share in the Caribbean Brewer. So that means the majority shareholders of Gera International hold major decisions regarding the operations and investments by the company. So the process of the transfer pricings and the cost allocation will therefore be decided by this mainly majority shareholders from Gera International. So the other shareholders, or called minority shareholders, such as senior management and employee from the Caribbean Brewer, they only hold 25% of the common share in the Caribbean Brewer. So they will just participate in the voting process to approve a decisions or reject it. So basically, it's based on the majority shareholder decisions to shift wealth of the cost allocation and the transfer pricing. The cost allocations issues that was made by the Gera International can be looked in the case when the JJ, the production managers, are extremely displeased with the new performance measurement system that was made by the Gera Internationals when they are acquired the Caribbean Brewers. First is regarding the cost, which is the previously the production personnel bonus is based on the total production cost over the sales, but there is an issue when a deposit cannot be collected on the exported Gera beer bottles, which is the all bottling costs are expensed and charged to the Caribbean Brewers. That was result in the production cost increase of over $6.1 million in the year 2009. So this issue effect in bonus reducing due to the bottle deposit issue, which is the previously not charged into the cost, but now that was expensed to the Caribbean Brewer. So the minority shareholders who depends on the dividend based on the production cost that does not exceed the 43% of sales as the Gera International make the guidelines. They also affected because of the bottle issue that increased the total production cost. There is also issue regarding the transfer pricings that was made by the Gera International, which is the transfer pricings that Gera International makes will negatively affect the minority shareholders, because the minority shareholders not only see their shares being reduced, but they also not since any dividend can be gained since the acquirements by the Gera Internationals, because of the amount of total productions increased due to the deposit beer bottles issues. So the transfer pricings diverts the profits into the Gera Caribbeans away from the Caribbean Brewer. So Gera Internationals, they make a sales to the Gera Caribbeans with the lower price for their exports, which is $25 instead of $50. So while the cost of the bottle issues increase the amounts of total production cost, it will result to the lower profits for the Caribbean brewer. So the Caribbean brewer taxable income also will be lower. Basically, the actions of the Gera Internationals that transfer the profits of the exports to the Gera Caribbeans, because the Gera Internationals, they want to enjoy the tax-free jurisdictions that was given to the Gera Caribbeans under the Bermuda. So we move to the question 2 to know to what extent that Caribbean brewer will vulnerable to the tax reassessments. So based on my calculation here, for the production cost of Gera, when it's transferred the export bottle cost, which is the $8 to the Tigua, we can look that Gera beer try to reduce their cost in order to get a lower taxable income. So the calculation that I made is here. So next, I also make a calculations for the production cost of Tigua, which is we can see that generally Tigua do not have an issue for the bottle cost since it was not expense. But as I calculate it here, I can see that Tigua have increased in production cost because Tigua need to absorb the cost of bottles from the Gera. So this was happened because of Gera may want to take advantage due to Tigua tax holiday that was given by the government, and in the same time to lower the taxable income in Gera. So in conclusions, if the Tigua income been lower, the high production cost of the Tigua will lead to the lower taxable profit that will be charged to Tigua. So next, we will move to the income statement that I was calculate for the Gera here. So as we can see on the calculation there, the amounts of sales exports of Gera beer are transferred to the Gera Caribbean, which is the subsidiary under the Gera International, which is the amount is $25. So it is 50% lower than the general sales price that was made by the Gera beer. So generally, Gera tried to transfer its export sales revenue to the Gera Caribbeans to avoid the tax, because with the lower profit that Gera have, it will be taxable with lower tax. And also, the Gera beer want to enjoy the tax-free jurisdictions under the Gera Caribbeans. So generally, it is unfair for the Gera to treat the different price for their subsidiary. So Gera need to sell it fairly regardless of their relationship. And for the Gera, their reported taxable incomes in the figure 3 is usually is around $8 million, but after we reallocate, they should be report at $9 million. There are about $800 difference between the actuals and the reporting amounts of Gera in the income statement. So with the 30% tax rates, Gera will be subject to around $200 increase in the tax as I calculate it there. So for the income statement for the Tigua, I have made a calculations as you can see here. We can see that Tigua report their non-taxable profits at around $20 million, which is in reality they should only be reporting a net profit around $60 million. So if we exclude the cost of bottles from Gera that the Tigua need to bear, we can see that the amounts have a huge gap, and it was proof that Gera tried to take advantage for the non-taxable amount in Tigua. So we have arrived at the last calculation part for the question 2, which is about the Gera revised income. So if Gera was charged the standards of $50 per case for their domestics and exports instead of $25 for the exports only, we can see on the calculation here, the revised income statement for the year 2010, Gera would show a profit around $38 million instead of around $9 million. So basically, the increase shares in the profits of JERA will increase their tax by around $8 million. So we move to the last question for this case, which is about the implications of the compositions of the board's members to the reporting of the CFO. So the implications of the compositions of the board members impacts on the full disclosure requirement for the reporting by the CFO. So basically, the majority shareholders is supposed to be an objective group who looks out for the best interest for the company. So since JERA International owns 75% of the common shares in the Caribbean Brewers, therefore their majority shareholders' votes and decision making are mattered to the whole company and also affected the minority shareholder. So generally, the compositions of the boards of member will determine how the major decisions and approval are done by the company. So the board often has the final decisions on many issues that company face, including the issue of financial reporting requirements from the corporations. So basically, the CFO, they would have to listen and implement the decisions that the board have agreed upon of the votes in the meetings. So the financial reportings and the disclosure of the company will therefore be approved by the board rather than the CFO itself. So this can greatly impact on the full disclosure during the financial reporting by the CFO, whether the majority shareholders will agree upon the full disclosure of financial reporting that have misstatements or vice versa. So the full disclosure by the CFO and the majority shareholders basically will affect the minority shareholders, because if we look previously, the bottle price were not factored into the cost, but now they are expensed to the Caribbean brewer, which negatively impact the bottom line. So the minority shareholders also impacted from the full disclosure by the CFO, because before this they receive around $0.53 for every dollar that company earn, but when the profit is transferred to the JERA Caribbean, 100% of the dollar was recognized. So in order to protect the unbenefit situations such as the minority shareholders are facing now, CFO should commit to fostering a good governance in the organizations, which is the CFO, if there are suspects that unethical behavior or actions may be occurring in the company, CFO should act to appropriately address these suspicions, which is the CFO should consider to obtaining a legal or professional advice to cater these situations. So that's all from me for the case 5 about the Caribbean Brewers. So thank you.